Hey everybody, Boris from BK Force. Welcome to Week Technos for April 23rd to April 27th, 2018 for commodity dollars for Aussie dollar, dollar CAD, and Kiwi dollar. And the theme this week, of course, was the rout of the calm dollar, primarily driven by the cold, stark realization that U.S. yields are going up, and therefore the competitive advantage of the high yielders is quickly and very rapidly eroding. And that in turn has completely changed the flows in Aussie dollar, Kiwi dollar, and dollar CAD with its own idiosyncratic issues. So everything that was top of the range now becomes the bottom of the range. I did not change the range numbers only because I sort of wanted to show you just how tight we are to the key support and resistance levels. I'm not very confident, but I'm pretty confident that these are going to be tested. Certainly the Kiwi is going to be tested. Aussie very likely going to be tested to the bottom. All of this is essentially the same thesis that I have on the majors, that we're going to have a continuation of a pro-dollar rally, and that continuation of pro-dollar rally is going to further and further compress the calm dollars to the downside. So the 76 now becomes the key support. We're very close to that. Dollar CAD already broke its topside support, and now the next level of 28 comes in, and possibly, depending on a whole bunch of idiosyncratic factors in Canada, we'll talk about that in just 1 second, it could even go all the way back up to 130. And Kiwi is teetering at this 72. That is pretty decent support for it now, but all of that seems ancient history. In a sense, all of these levels, I think, were important when the market was convinced that U.S. yields were going to stay relatively stationary. Now that the back end of the curve, the long end of the curve, is starting to pick up steam, it makes less and less sense to hold a non-U.S. asset like Aussie and Kiwi bonds, and that is in turn what's really driving a lot of sales in both of those currencies. So on the calendar, there's nothing much going on. I think the only thing we have as far as calm dollars is Australian CPI, and then a little bit of New Zealand trade balance, which actually takes on, I think, a special hue this time, because the terms of trade is one of the more negative aspects of a New Zealand economy. It's always running sometimes big deficits, and therefore, in a bearish sentiment environment, this number coming in bearish could have even more pressure to the downside. So it could be more intense as far as the reaction than any other time. And that's about it. There's nothing on the Canada side. The Canadian news was all this week. We had the story from the Bank of Canada that they are going to be a lot more dovish than we thought they were, and then confirmed today by relatively lackluster Canadian inflation data and okay, halfway decent retail sales data. But ultimately, this is the key thing. This is the idiosyncratic aspect of Canada that you need to watch for. It really comes down to yay or nay on NAFTA negotiations. There's a sort of an internal clock to create a new deal by May 1. They're negotiating over the weekend. So we could have headlines Monday morning when you guys open up trade. But regardless, this is going to be sort of a background story all of next week. How tight they are, how close they are, how confident they are they can get a fresh deal. Fresh deal will provide a nice boost to the loonie. Could even take it all the way back up to 125, because the one big overhang, the Canadian economy is not doing nearly as badly as the loonie is reflecting it. It's actually able to weather all of this turmoil relatively well. Plus, it's getting this huge tailwind from strong oil prices. But it's the NAFTA story that really is front and center. If they can find a deal, sign and seal it, that would then provide a tremendous amount of relief for the market, because the whole free market will stay in place, and therefore the flow of goods and flow of services will continue, and that provide a very big sentiment boost for the loonies. So be watching that very carefully as far as news flow goes. But in the meantime, it's clear that at this point, the trend is pro-dollar, anti-calm dollars. And when you look at the charts, let's take a look at the chart over here. We'll start with the Aussie. You see how sharp the correction has been over the last days. Sort of this realization that U.S. yields are rising and it's time to bail. The high yielders are really coming to this is a pretty decent level of support, the 76. After this comes the 75. It's not impossible. It's probable, especially if U.S. data is okay and if we're above 3% by next week, to imagine that we could actually test the 75. But first and foremost, of course, it's very reasonable to think that 76 now comes in as the key support area. That gets broken. This is the first time we've visited these areas since December of last year. So it's a major material move here, and it looks like, as we mentioned in the offing, there's a lot of acceleration to the downside. It looks like we can go further as we go. Same thing with Kiwi. Kiwi, which was sort of this relative bid trade for the last 2.5 weeks, ran all the way up to 74s and died right then and there. This has been a quadruple top support, died right then and there, and then now really accelerated to the downside. The interesting thing here with Kiwi is the bail from today, as the market's starting to really appreciate the power of U.S. yields. It's really, at this point, next week is really going to be the trade on U.S. yields. If we get continuity here, if the market really, and it feels like the market wants to take that 3% level. If we take that 3% level, it's almost a given that Kiwi will be 71.50 by that point. And then if you add on to that the possibility of negative terms of trade, it's not at all inconceivable we could see 71 before the end of the week. So acceleration to the downside in both Kiwi and Aussie. CAD already had the big move to the upside. The loonie has already weakened materially. Today we're ending up on the day's highs. A very bearish sign for loonie, bullish sign for dollar CAD. But as I said, this is its own story, because as positive as this looks, it could reverse completely if we get some positive news on NAFTA. Therefore, that's an idiosyncratic risk here that could that the charts are just simply not showing. So you need to be aware of that. But overall, the deceleration to the downside is increasing. It looks like it's a momentum trade, and certainly the calm dollars are the primary victims of higher U.S. yields. And if that story continues next week, you will most certainly see lower Kiwi and lower odd as we go forward. Wish you guys the best of luck, the best trading. Boris, over and out.